Today's episode of This Week in Startups is brought to you by Desk.com, the all-in-one customer support app for fast-growing companies. Visit Desk.com/twist to get your service desk up and running today for as low as $3 per month. And by Citrix GoToMeeting. Meeting is believing. Sign up for a free 30-day trial by using the promo code TWIST. Visit GoToMeeting.com today. And by AWS Activate, the Amazon Web Services Startup Program. It's easy to start and scale your business with AWS. Visit aws.amazon.com/activate.
Hey everybody, it's Jason Calacanis, and this is This Week in Startups, the show where we talk to entrepreneurs, investors about technology and founding companies. And today on the program, Gil Penchina. He is a world-famous angel investor who's invested in over 60 companies, including LinkedIn and PayPal. Those are multi-billion-dollar exits, and he's done fabulously well for himself. But he's also a really considered, interesting guy who is part of a new movement called syndicates. And those syndicates are basically groups of angel investors who work together to invest in companies. So when he decides he's going to invest 25 or 50K into a company, he gets another couple of hundred angel investors to come behind him and put $200,000 or $300,000 in. This has made him one of the most powerful angel investors in the world and one of the most sought after ones. And I got to sit down with him for an hour and talk about the changing landscape of venture capital and angel investing, including some sharp elbows that get thrown from once in a while by the big VCs who are particularly threatened by this syndicates model of angel investing. It's an amazing interview. He's a fascinating guy, and you're going to learn a lot. Stick with us.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody, and welcome to This Week in Startups. It's me, Jason Calacanis, your host. You can follow me on the Twitter @Jason, and you can follow the show @TWI Startups. Of course, you can go to thisweekinstartups.com and see what we do here. If it's your first time on the program, it's pretty simple. We have either a founder or an investor, or a couple of journalists in the technology entrepreneurial space, and we talk about starting companies. That's why it's called This Week in Startups, right? The name is what we do. But this week, we're super, super delighted to have Gil Penchina on the program. Now, Gil is an entrepreneur and an angel investor, so that sounds familiar. That's exactly what I do as well, so we're sort of cut from the same cloth. So welcome to the program, finally, Gil.
Thanks, Jason. It's great to be here.
You have been angel investing and starting companies here in the Valley and in technology for how long?
15 years now.
15 years. So you were
I'm
here.
almost an expert.
Almost an expert, right. And what is an expert anyway in this? I mean, everybody assumes Silicon Valley is an insider's game. It's like all inside baseball, and it's who you know. Were you born here and into some secret club that allowed you to become what most people consider the most influential angel today? Or did you fight and break your way in as an outsider?
Yeah, no, I moved here in 97 and felt very much like an outsider, right? Didn't know anybody, hadn't gone to any of the fancy schools.
No Stanford, no Harvard,
No Stanford, no
MIT,
Harvard,
no Media Lab, no NYU, ITP, nothing.
None of that. I mean, I did go to school, but I didn't go anywhere special. And so my first year here, I started angel investing as a way to meet people. And I think I went to, at last count, about 400 networking events in my first year.
So on average, 1.2
Two a
day.
About two a night.
Two a night, pass out 1 or 2 nights.
4 to 5 nights a week. And my theory was I was going to get my Stanford MBA that way.
Yeah, and you did.
It worked out.
Angel investing in 97, 98 timeframe, what was that like? Because it really weren't, I mean, the number of angel investors, it was like, who was angel investing? It was like 10 people.
Yeah, there weren't that many. I mean, folks like Reed was doing it.
Reid Hoffman from
Reid
LinkedIn
Hoffman.
fame.
Yeah. Dave Wharton, who's now running a venture fund. Esther Dyson obviously was doing it all the way back then. So there weren't many of us. And, back then you invested in PowerPoint because it took millions of dollars to start a website, which today seems crazy.
Yeah. And since that time, how many companies have you invested in?
About 65.
65. And the biggest winners would be?
LinkedIn, PayPal, had some nice base hits, things like military.com and Evite and others.
Yeah.
But like any VC will tell you, it's the 1% or the 5% that return the fund.
Yeah, something like a PayPal or a LinkedIn, I'm going to assume returns more than 65 times the money on it.
LinkedIn was 750x at peak.
750x at the peak. Wow.
Now it's down in the 600s probably.
So that makes, if you made nothing else on the entire portfolio,
You win.
You would be 10x your portfolio. So it's a it's pretty much a numbers game.
Yeah.
And now that you have so many of these investments, you seem to have learned how to identify what's got a decent chance of winning. So when you look at a project, do you have like a checklist in your head that you go through and say, hey, this reminds me of this in PayPal or LinkedIn? What's your signaling like?
No, it's a good question. I mean, honestly, if you went back and looked at the two companies that made me the most money, one of them was started by a hedge fund guy who had no technical background.
Peter Thiel, PayPal.
You would normally assume is like a terrible signal in today's sort of Y Combinator tech founder world.
Yeah, a hedge fund.
Hedge fund guy wants to do a startup in technology.
In finance. Yeah, how's that going to work out?
And the other one was, an Oxford-educated guy whose last job was strategy and government relations at his last startup.
And that was?
Reid Hoffman.
Reid Hoffman
Also,
and LinkedIn.
Not the normal profile you would look at.
So two outsiders, actually, to the Valley at least. Listen, he's a hedge fund guy, an Oxford guy, you're powerful guys probably.
Peter was not an outsider. Was an outsider. I'm not sure Reid was by that point. He had been at the PayPal gang for a while.
He had been PayPal alum.
So, I would say in terms of signal, right, so yes, today we look at, technology companies should have a technical founder. You want to have someone who's young. There's a lot of heuristics around that. I look for a couple things. One is like, do they have some traction? Have they been able to get something done with no money? Because that's a real good sign of scrappiness in today's world where you can boot up a company for $500 or less.
Right.
And the other one is, are they fundamentally unemployable?
Fundamentally unemployable. So you want to invest in the people that can't get a job.
They're so annoying. They're so crazy. They're so passionate. They're so aggressive that if they worked at a big company, you would totally fire them.
They'd be the a-hole at the big company. And those are the people you seek out.
Those are the rebels and the disruptors, right?
Yeah. And so in the anti-portfolio, you said no to people, and those no's cost you big time. Who are your no's that you look back on now? What did you learn from them in the anti-portfolio, as we call it here in Silicon Valley?
Yeah, it's interesting. I'm even more frustrated, not in the anti-portfolio, but in the ones I chose not to chase. So, like, I thought consumer storage had been done so many times, right? I mean, all the way back to the 90s, there were guys raising $100 million to do backup.
Yes.
Didn't even chase Drew a bit.
In
right?
Dropbox, Drew Houston.
Ran into Drew Houston at one of these many networking parties, went to an event in Mexico with him for 4 days, never even asked.
Wow.
Right? I look back and I'm like, okay, yeah, I'm an idiot. What are you going to do?
And that is the nature of being an angel investor, is feeling extremely stupid extremely often because you can't, you don't have the ability to write the check for something that that you actually believe in. Sometimes you believe in it, right? And you don't write the check.
Yeah.
Explain that, condition that we have as angels where you want to and then you don't. And that hump between, there's that little moment, that space where you don't do it or you do. What is that moment there?
Not sure I've ever thought through that. I mean, to your point, you spend most of your day saying no to people. Mm-hmm. And often no to people you like. So it's kind of like asking me, what's that moment where you decide that's the girl you like, right?
Yeah.
There's a lot of things that go into it. It's chemistry. It's what you're looking for. Some people are hypothesis driven. They do a ton of research and they pick a sector and they look at everything in the sector. Other people are focused on, people they want to invest in. So I do have a people thesis, right? Which is if there's a guy who can clearly raise an A, who I think is a good person, who's done it before, am I going to write a check? Always.
So they've done it before, this person.
I mean, the way I describe it is when Michael Jordan decides to go play baseball, I put my checkbook away.
Right.
When Michael Jordan says, you know what, I'm tired of losing, I want to be a winner, I'm going to go play basketball again, I write a blank check.
So when you over these years here in the Valley, the 15 years, you've made enough connections to know, hey, this is a legit person, and it doesn't matter what they do. The fact that they are going to do a startup and raise a venture round, I might as well just get on the train.
Yeah. I mean, Max Ventilla at Alt School was a great example of that recently.
Yeah. So explain who Max is, what the alt school is, and why you back that.
So Max is a serial entrepreneur, started a number of companies. He had started Aardvark, which got some good traction and was bought by Google. He then spent a couple of years as a senior executive at Google and left to essentially reinvent homeschooling.
Reinvent homeschooling.
And alt school's really going after the one part of the education market that doesn't have government and process and all the things that a lot of entrepreneurs hate.
And that is?
People homeschooling.
Got
right?
it.
So that it's you can teach your kids at home. They don't have to go to high school, but the
Right.
resources then become very community driven, very web driven, and there are themes within homeschooling, like people who homeschool for religious reasons, people who homeschool because their kids are in competitive sports and travel a lot. Executives who travel all the time, like Jeff Bezos, I saw once on some vacation, his 4 kids and his armada of teachers and security guards, and
Yeah.
right, his kids get teaching on the road as they go with him. So Max is really trying to sort of provide resources for that community, and the hope is that if the homeschooling movement sort of becomes better resourced, more people might do it.
And they're actually having physical locations here as well in San Francisco, and they're
Yep.
doing pre-K and all this kind of stuff, and
Yep.
kindergarten and everything.
And they now went out and raised, a crazy sum of money from
$33 million A.
Yep.
Founders Fund, Andreessen Horowitz, first round, Lean Capital, Harrison,
Right.
Metal, a bunch of people.
And so the guys who invested with me in the syndicate basically got in at a lower price and, oh, by the way, lower fees than, the big boys charge too.
Yeah, so let's explain that a little bit. I mean, it's a great segue. You have someone like Max who fits the, hey, it's a Michael Jordan type guy. He sold a company to Google. He spent time at Google, and now he's getting back in the game in a big space. And what, you meet him for lunch, or you ping him cold and say, what are you working on? Or he pings you and says, hey, pal, I got something. Or you see he's talking about it. How did you wind up becoming aware of the alt school and then convincing him or deciding to put money in?
I've seen him a number of times over the years, and I'm always saying, when are you quitting? Like, why are you still at Google? And by the way, please tell me when you quit, because I want to be involved. So I begged mercilessly until he finally said, actually, I am doing a round, and, it's not going to be great terms, but if you want to put some money in, sure. And I, wrote a check on the spot.
So, hey, let's go to a commercial break. And when we get back, I want to talk to you about the AngelList Syndicate and how that's changed your investing and how startups look at you and where it's at. So AngelList Syndicates with Gil when we get back. Hey, what an amazing interview we're having here with Gil. Just a wonderful angel investor, tons of information to share. Let me tell you about a fantastic product that we use here at This Week in Startups. It's called TWiST.com, and it gives us a 360-degree view of all of the customer support issues that we have as an organization. And what are the customer support issues we have for This Week in Startups and Launch and the Launch Festival? We have people who will be upset that this episode has an audio problem, or maybe they're upset that their ticket didn't go through for an event. All kinds of problems. The launch ticker, maybe somebody subscribed and it's not working. We constantly have, of our millions of customers for our product lines, dozens of them every week who have problems. We need to organize this in one place, and we need to have a universal inbox for all these different types of complaints and customer support issues and opportunities, and we do all that through TWiST.com. It saves us a ton of time, and it works anywhere, on your desk, on your tablet, on mobile. And you get incredible analytics, which you can route that feedback to your product teams. We use it here, as I said, and it's only $3 a month. It's super affordable. Go to TWiST.com/TWiST, TWiST.com/TWiST, and use this product. It is the best customer support and customer relationship product ever made. It works wonderfully. It's elegant. It's simple. And, it's from the people at Salesforce, so they do a really good job over there. Go ahead and thank at go ahead and thank at Desk on your Twitter handle and go visit desk.com/twist, desk.com/twist. Thank you to my friends at Desk. Let's get back to this amazing interview with Gil. Hey, everybody. Welcome back to This Week in Startups. Thanks to our partners for making independent media like This Week in Startups possible. Today on This Week in Startups, Gil Penchina, who is considered either the most influential angel investor right now or certainly amongst the top 5 or so in the business. He's invested in companies like PayPal and also LinkedIn and done fabulously well. And he probably doesn't need to work. I'm assuming you don't need to work, but you love doing this. You keep doing it. Are you addicted to it? Are you a gambler? I mean, why do you keep doing it?
Some people are good at sports. Some people are good at this. I mean, it's adrenaline. It's social. It's fun.
So it's rewarding to be good at something like this, and it's a very unique skill being an angel investor.
It is. It's I mean, I think frankly, it's very similar to venture in some ways, right?
Okay, compare contrast venture to angel. How is it similar, and what do you think the key differences are?
Well, I mean, we make more investments, right? A VC over 5 years might make 10 investments, and one of them really makes their reputation. And in the same period, an angel might make 25 or 50.
Yeah.
So the pace is much higher, the risk is much lower, and frankly, I like that. It suits the operator personality better, which is you want to know how you're doing, you want to get more feedback, you want to get more hits on base. Where I think, venture, I talk to a bunch of guys who say, I do 2 deals a year and 5 years later, I'm still not sure I'm any good.
Wow. Yeah, it's basically like they take 2 shots.
2 shots on goal a year.
Yeah.
That's rough.
Hey, if you miss like 5 in a row, you're starting to think, God, I'm terrible. At least if you're doing 1 a month, you're like, yeah, I missed 5 in a row, but then I hit 3 or 4 in a row. It feels a little bit better. So when you started angel investing, you typically put in, I'm guessing, 25 to 100K or something?
When I started in angel investing, one of my statements was, I expect to lose all my money. And somebody said, you expect to? And I said, yeah, here's my thesis. I have terrible deal flow. I mean, honestly, who the hell am I?
Right.
This is 1998. I've been in Silicon Valley for a year. I don't know anybody. I'm going to take this terrible deal flow, and I'm going to apply really bad judgment to it.
That sounds like a winning formula.
Like,
bad deal flow times bad judgment equals
bad results. But here's the cherry on top of the cake and icing, which is I'm really excited about this. So add emotional decision making to bad judgment and bad deal flow, and the odds of you doing anything marginally successful are 0.
Yeah, Vegas sounds like better odds.
Right, it does. So I would put in literally as little as they would let me.
So 5 or 10K.
5 or 10K.
Right.
If I could put in 1,000, I would have, but nobody would let me.
Right. Minimum is usually 5K or 10K in that day and era. But then you start piling on the wins. You build a little bit of a chip stack, as it were, and now this crazy thing, the syndicates happens.
Yep.
And so our friend Naval decides, hey, there are angel investors who are good at what they do, and there are other people who want to invest in these private market companies. So I'll let anybody create a syndicate. Explain to somebody who's not in the industry what a syndicate is and why this is a kind of a revolution in angel investing.
Sure. So the analogy I always use is when you decide to follow Jason on Twitter, what are you doing? You're agreeing to read whatever Jason writes. When you follow Jason's syndicate on AngelList, you're agreeing to put $1,000 or more into whatever Jason invests in. It's a very similar sort of programmatic agreement to follow. And so what happens is Jason or I will invest in something. You'll get an email alerting you that your $1,000 is being called. You can send the money in through electronic check through the ACH network or wire it in. They create a little fund, and they write the startup 1 check instead of 100 checks.
And so, in practice, where you might put in 25 or 50K, how many people will then co-invest with you in the alt school, and how much money, without giving a specific example, will that be? Or maybe that is public, I don't know.
It's gotten to the point where it's actually a little crazy. I now have 390 people who will follow me into every deal for up to $3.7 million.
Okay, this is a very big
deal.
number.
Per deal.
Per deal. And just so people know, an angel, a Series A that a VC would do in this valley is typically
2, 3,
Two or three,
5,
five, yeah.
maybe.
So the total amount of your syndicate, just a band of 390 angels who trust Gil's judgment, is the equivalent of a VC firm.
Yeah. Oh, it's actually
Obviously.
better than that because you can do as many deals as you want, right? It's sort
Right.
of I mean, until people obviously run out of money at some point.
Right. But if they're putting in onesies, twosies, threesies,
Right.
it doesn't seem like they will. Now, can anybody do this?
Mm-hmm.
Can anybody put in the $1,000, or does it have to be a certain type of person today here? Because the SEC rules are changing a little bit, and people
Right.
are following this. So explain to the audience who doesn't know, in some cases, who can join your band of angels?
So I'm not a lawyer, so
Yeah.
I may get this wrong, but
Yeah.
as I understand it, you don't have to be a qualified investor because of the new federal crowdfunding rules, and so literally anyone
Right.
can invest. I've had some people who said they want to invest $25,000 a deal, and I have to sit them down and say, dude, you need to do like 10 or 20 or 30 to have a shot
Right.
of doing
You
well.
did 65 to get 2, so that's
Right.
1 in 30.
1 in
and
30.
You're in the valley.
Yeah. So given that, do you really want to invest $700,000 in whatever stuff I put, my money into? And they go, no, that's not what I meant. And so I've actually had to
Explain to people
explain to
what's going
people
on here.
the commitment and get them to sort of dial down their number in some
Yeah.
cases. But
But it's accredited investors right now on AngelList. They're not letting anybody in. So AngelList is actually filtering that for us. Now, you have
Good.
to be accredited in some way, which is like a certain amount of net worth, I think.
I don't know the answer to that.
Yeah. So it is. They have to be accredited. But now there is also this limitation. Only a certain number of the 390 can get into each syndicate now.
Yep.
So that number is
100.
100. So you get this 100 people can be coming alongside you, and so that means the 3.7 or whatever comes down realistically. So you've done how many of these now, and what's the range that's closed?
I've done 5, and I didn't have 3.7 million when I was doing them. So I was doing deals that were $200,000, $300,000, $500,000.
Wow. So in practice, you've actually closed $500,000 for a startup. It's incredible.
It is kind of crazy, but it's working. And like everything else, it looks crazy until it isn't.
Right.
So with the amount of money we're talking about, though, you can't put 3.7 million to work in a seed investment.
Right.
So I've actually been in the process of leading an A and co-leading 2 other A investments now to try to sort of step up my game.
So you can actually go and not do what you've done traditionally, which is the angel round. You can say, hey, somebody's raising an A, I could co-lead, or I could be one of the 3 people to put $500K in.
So I've done that a couple times now, and I've actually just had a term sheet signed this week where I am leading the A, and I pushed out the VC who I was competing with.
Wow. So now
I'm actually playing the VC A round game.
Wow. I mean, so for people who don't know, I mean, this is actually... it kind of shakes the entire infrastructure and expectation of Silicon Valley, where the VCs, the venture capitalists who raise these ginormous funds, $200, $300, $400, $500 billion, $500 million, they really controlled the valley.
Yep.
Because you could raise angel, and that was hard, but to really get a business to become significant, you need that A round, you need a VC.
Yep.
Now you don't.
Now you need Jason.
Or Gil,
Yeah.
or Tim Ferriss, or a couple of other people who have done this. Fundamentally, because you've also been an operator and entrepreneur like myself, how does this change things for when we're on the other side of the table and starting businesses, do you think?
I mean, much like AngelList in general, it's just increased the liquidity and reduced the friction required to get shit done. But when I go and I talk to a founder, I'm very much on the entrepreneur's side in a lot of ways, and so I'll point out that, for example, the syndicate doesn't really care about pro rata. And you tend to, as you raise more and more money in successful companies, have huge fights with people over pro rata.
Yeah.
Which I find funny because the VCs normally sell it as, I'm here to stand behind you if there's a problem.
Right.
What they really mean is, I'm here to grab more equity through my pro rata when you do well.
Right. And pro rata, for people who don't know,
is the right to buy more down the road, basically.
Right. So if I own 10% in the angel round, when the A round or the B round subsequent finance happens, I can keep that actual percentage.
Yep. By having the right to buy more.
The right to buy more.
So, I don't need board seats because I'm not the fiduciary that they are. So, and I'm less worried about control because I tend to trust the people I'm investing in more. So there's a lot of ways in which a syndicate is different and better. There are some ways it's worse, right? VCs do have some infrastructure. They do have the ability in a downturn to put money in, although, as we saw in 2008, when they do, it's pretty awful for the entrepreneur at that point.
Yeah, this is always like their claim, like, oh, we're going to stand behind you, and when things get rough, we have this big paycheck. But what people don't realize, and you and I have lived through a couple of these downturns, in fact, we've lived through 3, and they're all equally brutal.
Yeah.
The same thing happens every time. They're like, oh, you're out of money? You got 6 months of runway. Okay, well, we're going to have to recap, or liquidation preferences. We're going to get 3 or 4 times our money before we get our equities. But, it becomes very onerous, doesn't it?
My joke is the VC is absolutely there to stand behind the company in a downturn at the expense of the founder.
Yeah.
They will back the company and force the founder out.
Yeah. Or cram them down in their equity. When you're, what option does a founder have all of a sudden when it's...
You don't have an option.
You have no option. You got to take that money, and then they may tell you your company's now worth, half of what it was worth, a third of what it's worth, and our money
A third is generous in most cases when that happens.
So if a founder could see themselves go from owning 30% of their company to what? What's the worst you've seen of it crammed down like that?
I got recapped in Zip Realty and ended up with literally nothing. You can get pushed to zero.
And there's no
easily.
legal recourse to this because you have governance in a company that...
No, the alternative is bankruptcy, and nobody wants that. So
Right.
that happens. Another thing that's interesting is I now have 390 people who will promote the latest ebook that the UXPin CEO came out with, right? They're all going to go on social media and tell their friends about this awesome new product that they're an investor in.
Yeah.
When we're recruiting now, I make sure that, those followers all get, emails about, we're looking for this type of talent, or we're looking for office space, or we're looking for you name it. That doesn't mean 390 of them are helpful, but in a
You only need
crowd that
one to be
large,
helpful.
I need one.
Yeah, if you're looking for a couple of extra desks or a CFO or a designer, if you're not going to fill 10 office spaces, you're not going to fill 10 CFOs.
Yep.
All right, when we get back, I want to go through some more of the things you've invested in through the syndicate and talk a little bit more about that on This Week in Startups. Stick with us. Citrix GoToMeeting. I love Citrix GoToMeeting. I use it all the time. It's not just video conferencing. It's not just group conferencing. You can share your screen. I can share your screen. We can use it on a tablet. We can use it on mobile. And HD Faces is delightful. I literally don't use the cameras that come with my Apple computers. I buy beautiful 1080p HD cameras because HD Faces takes advantage of that. I think I use the Logitech ones. They're beautiful. They're like little squares, little chiclets. I put them on top of all my Apple computers around here because it literally is like those conferencing systems that people used to spend $250,000 on just a couple of years ago. You use GoToMeeting, it works fabulously. I literally do at least 15 meetings a week on GoToMeeting, literally 2 or 3 a day. Some days I'm on back-to-back-to-back ones, 5 of them. I did one in a restaurant the other day. I was meeting with somebody who was speaking at the event. They had another person who was speaking. Literally, one of my producers opened up their laptop, fired up a GoToMeeting on the spot, and the 3 of us in a restaurant did a GoToMeeting, sharing screens, showing product. The fidelity was flawless and perfect. And if you are doing business, investing in companies, doing partnerships, sharing mock-ups and looking at product, you want something that is reliable, and you want meetings to start on time, and you want it to work across every platform. You don't want a free solution. You don't want any shenanigans. You want it to just simply work, and that is GoToMeeting. Go ahead and visit gotomeeting.com. Click on the Try It Free button, and then use the promo code TWiST. That's right. Go to gotomeeting.com, click on the Try It Free button, use the promo code TWiST. Citrix GoToMeeting is flawless for hosting online meetings, and you can launch or join these meetings from anywhere. Literally, I've done it with my iPad mini. I've done it on my phone. I've done it on my laptop. I've done it in my office. And actually, one time we needed to have like an extra camera, so I took my iPad mini because I wanted to show a product that was only on somebody's phone. I literally took an iPad mini, I logged in, I turned the camera on, boom, I pointed it at somebody's phone and was able to do a quick demo of their app through the iPad that then everybody was seeing because I was using my laptop to also be on the conference. It was insane. The fact that this is even possible is mind-blowing to me. Go ahead and go to gotomeeting.com, click the Try It Free button, and then use the promo code TWiST. It is absolutely flawless. Citrix at GoToMeeting. Meeting is believing. And I tell you, this is a true statement. Meeting is believing. Let's get back to Gil and this amazing episode with a very powerful, insightful angel investor. Hey, everybody. Welcome back to This Week in Startups. It's your boy, Jason Calacanis, here at WeWork. Thanks to my friends at WeWork. What an awesome space. New York, Chicago, San Francisco. Coming soon, Chicago. Chicago and London coming soon. New York, San Francisco, Boston, D.C., Seattle, L.A. Great space. And, the folks at WeWork, they just get it. Like, they used to come to all of our events. They still do, but they said, listen, we want you to host your show at our location. And they built me this beautiful studio here, and they paid for the lights and everything. They're just great hosts. So thanks to my friends at WeWork for supporting independent media like This Week in Startups, and thanks to our partners and sponsors. With me on the program today, Gil Penchina, and if you want to follow him on Twitter, he's Gilpen China. Gil Penchina.
That's me.
But it's Penchina. This syndicate thing, it's kind of blowing people's mind in Silicon Valley, and it's only a couple of months old here. I started doing it as well. And I can tell you now, having invested in almost exactly the same number of startups you have, I'm like somewhere between 60 and 70, so I think we're kind of simpatico in that way, although I've done it in a shorter period of time. I've started to catch sharp elbows, twice from VCs.
Do tell.
It's kind of hard to tell these stories. I guess we have to take out the names and everything, and I have to sort of scrub it a little bit.
You're going to take out the names of the guilty, just to be clear.
Yeah, but I mean, I'll give you an example. I'm the first money into a company.
Yep.
And obviously, when you're the first money in, you're taking the most risk. The company is a great idea. The founder's a first-time founder. The VC puts money in. VC then tells founder, you didn't hit the targets that we needed you to hit. Kind of beat up the founder a little bit, kind of make them feel not so good about themselves. And they say, but we still believe in you, and so we're going to give you this inside term sheet. And the founder says, oh, that's great, I got a term sheet because I'm only 6 weeks away from being out of money. Founder never calls me. Because if you're 6 weeks out of money, I got friends, I got more money, I can help. I never get a call. I'm wondering, why didn't I get a call? And then I read on, tech blog that the company's raised money. And from a nice guy, nice group, whatever, I'm okay. I like that person, but I'm like, hey, what happened? Don't shop the term sheet. Because if you go talk to any other investors, they're going to realize you're such a failure that they will never meet with you again, is what they told the founder. So, what in that? So, and I tell you, my sort of taking of this is they know that I can write a $400,000, $500,000, $600,000 check right now. Mm-hmm. So they know that if the founder comes to me, I'm going to be an option.
Yep.
And they also know that I have the ears of
lots of other influential
Sequoia or Benchmark or Excel. So I'm eliminating some of the people who could be this investor. I'm sorry about doing that. Charles River Ventures, Andreessen Horowitz.
The nice people.
People who are friends of mine. Actually, in this case, I thought this person was a friend of mine. Obviously, I woke up with a bloody effing nose, so I don't feel like it. But I called the guy and say, hey, what's going on over here? And he's like, we'll make it up to you on the next deal. But that's not kosher with me. I got to tell you that right there. What do you think of a situation like this?
So I'm not sure they're coming after you for your syndicate as much as they are beating up and taking advantage of an entrepreneur.
Absolutely.
Right.
Yeah.
And I'm on record on this. Hunter Walk did a decent interview of me that was really quite lovely, saying if you get an inside term sheet, you should always call me. One company I'm involved in, literally it was the same story. The VC says, hey, we're going to make it easy, and, fundraising's a pain, and you're busy. We'll just do a simple, easy inside round.
Simple, easy peasy.
Right.
Now, that does sound simple, easy peasy. I already accepted your money, and now you're going to give me more money. Wow, I just get more money in my bank account. Why is it a bad idea for a founder to just take that inside term sheet?
Well, because they are, in most cases, saying, I'm going to take advantage of you by reducing friction. Right? It's a lot of work to fundraise. You already like me. So in this case, it was a bit of an up round, not as much as we thought was fair. And then they added super pro rata, which is like the right to buy even more than their fair share in future rounds, which I literally haven't seen in 10 years.
Huh.
Like, I haven't seen a term sheet with Super Beretta in a decade in the Valley.
Hmm.
And that pissed me off.
Yeah.
And so I went in and bid against the insiders, at which point, one of my fellow board members gets really angry, accuses me of grenade throwing in the board meeting.
Nice.
And says very indignantly, "This is an insider round." And I looked at him and I said, "I think I'm an insider. Fuck you."
Fuck you very much. So the VCs are doing this, and they're duping with these inside rounds. They're duping these founders into thinking that fundraising is hard. Because in a way, fundraising is hard, but it's not hard in this environment. And I believe that fundraising and becoming good at it is an essential part of being a founder, because you're telling your story and you're going to great people and getting their great feedback on your story. And at the worst case scenario, if you meet with 10 of those people who I or you could put the founder in touch with, or even just 5, if you go to see Roloff or Bill Gurley or whoever it is, my God, Andrew at Excel, they're going to give you such great feedback. Would a VC ever look at you coming to that meeting and then pass and say, but since I've passed now in this moment, I am scarlet lettering, you are never going to get my money again?
No.
So that's just a bold-faced lie from this VC, manipulating the founder.
I mean, he sounds like someone who is busy trying to make sure he wins at all cost. And, there are people like that.
Win at all cost.
Right? I mean, there are people who like to locally maximize and people who like to globally maximize, right? Your
Locally
long-term reputation versus your ability to be successful in the short term. And it happens. And, to be fair, not all inside rounds are bad. Sequoia's inside round at YouTube and at WhatsApp appear to have been very generous. August's inside round at Fastly was quite generous. I mean, there are exceptions to the rule.
Yeah, and so when an inside round happens and it's generous, because the valuation went up significantly. How would you know to take it or not take it?
I think you need outside counsel who knows what the market fair value of your company is.
You
need someone who knows to be able to advise you. So in companies where you or I are an investor, you and I generally know what the market is, right? You can call a couple friends if you have to and say, hey, if I had a company that looks like XYZ,
a SaaS company, software as a service company with $1 million in annual run rate, and it's doubling every 5 months.
What's that worth?
What's that worth?
Right.
Oh, that's worth 15.
It's funny. I literally asked that question yesterday. $1 million in annualized revenue, SaaS company.
SaaS company.
What's that worth? And the guy looks at me and he goes, 20 pre.
Yeah, I was about to say 15 to 25.
Yeah.
Depends on the growth rate, right?
Yep.
So the growth is doubling every 6 months. Maybe it's worth 20. And it's doubling every 3 months. It's worth 30. Who knows?
Right. So if someone comes in and offers 20, I think it's great. If someone comes in and offers 16, I go, how much is my time worth? If someone comes in and offers 12.
Yeah, my time's worth that extra $4 million. I'll take a week or 2.
Yeah, or a month even, right? I mean, it is. I think it's a great temptation, and we're all human, right? So if you have the opportunity to get a big discount by helping, quote unquote, helping the founder, sometimes you might opportunistically take a little too big a discount. That's probably the generous way of thinking about it, right?
Right.
People are human. I want to get a good deal and look good to my partnership. This kid's going to be rich anyway. What does he care?
Right.
In which my answer is the kid cares.
And even if it's a first-time entrepreneur, do you want to be the one who, when he looks back on his career, says, you know what? At that moment when I was naive, beep, ventures were the ones who beeped me. I mean, that's basically what I don't want to have that on my reputation list. I don't care how much money I ever make in my career. Do you ever want to have people think that you took advantage of a founder?
I don't.
Isn't that the worst thing you could ever think of?
But, you're young in your career. You're trying to be successful. You need to look tough. I mean, it's human, right?
I guess so, yeah.
My point is just an inside round is too good an opportunity to steal, so that you, the founder, need to be thoughtful about who's offering it, what their motivation is, and what the alternatives are.
I just love that Hunter Walk, from Homebrew, who did a great episode just a couple of weeks ago, has put out there, if you have inside term sheet, call me. I will take a meeting that day.
Yep.
I'm going to tweet that, man. I love Hunter.
Okay.
I'll tell you what I love about what's going on right now. You tell me. Is that there's a camaraderie amongst the angels. Me, you, whoever the guys around. Like, it feels like we got this like scrappy group over here who's like, hey, listen, we can do shit. And then you got this old guard over here, some of which we like and some of which we don't. We got some sort of intel on them. What do you think this all looks like in 5 years? If we keep going at this pace, where you and I are doing 1 syndicate, 2 syndicates a month, in 5 years, what is this going to be like?
I think the next VCs come out of this platform, right? And that you don't need to have a practice. You don't need 6 partners at Benchmark. You know, Bill Gurley can go and start a syndicate today. In fact, you know, Kevin Rose has over 3 million in followers. He could quit Google Ventures today and be his own VC.
Yeah, and they invested in
AngelList.
AngelList,
As
and
did I.
yeah, smart move. I just have a couple of advisor shares, I think, over here in the corner, but they're pretty de minimis.
That's not bad.
Well, listen, whatever. I mean, we're all lucky guys to be, you know, people to be in this industry to begin with at this time in history.
Like, why would you start a seed fund with 20 million?
Yeah.
When you could get $1 million, $2 million, $5 million per deal on AngelList. And it's funny, I had someone 5 years ago ask me, you know, hey, Gil, you seem to like this stuff. Why haven't you become a VC yet?
Yeah.
And I said, it's very simple. There's 3 reasons. I don't like accountants, I don't like lawyers, and I don't like LPs. Other than that, it sounds great.
You don't want to have the limited partners. You don't want to do the lawyers. You don't want to do the accountants. And now you just have a platform.
Now you just have a software platform, and people click a button, and you write checks, and you're done.
And now AngelList, let's talk about Naval's business. He's been on the program 3 times. And we both own some shares in there. What do you think Naval's business looks like in 5 or 10 years? Because this is, I think, you know, you and I are gushing over how we're leveraging his platform, but he has the platform. So what does that platform look like and his economics look like 5, 10 years from now?
So seed and A-round investments are an asset class, and he is going to have the best data and the best access to that asset class of anyone. He can build a massive financial services company to sort of have that access. The syndicates also, interestingly, do have some pro rata rights, which he may be able to use down the road. So that'll be interesting. He's building a marketplace for talent. You know,
that's fascinating.
Like, I'm on the UXPin AngelList email, and like, we get a job applicant at least once a week, often once a day, and we haven't been fundraising in 6 months.
Quality is off the charts.
Yeah,
right now.
So there's a ton. He's got literally a ton of businesses inside AngelList.
And every time you and I raise money on there, he gets a 5% carry, and
Yep.
we get a 15. Or actually, we can set whatever. You set yours at
15.
So I'm at 15
Yep.
as well, and then he gets 5. So if we hit a
Our
PayPal
goals.
or a LinkedIn,
He'll make a lot of money.
a unicorn, and the appreciates $100 million, he can make $5 million.
Yeah, and he's got 50 or 100 now from the syndicate so far between all of us.
Huh.
That he
It's
owns a small
fascinating.
piece of. So
Yeah.
I think that's pretty interesting. I think the job thing is pretty interesting. If he had an ad product that let me promote my syndicate, I'd pay for it,
Interesting.
right? Why wouldn't I?
No, absolutely would. So what about this 99 rule? Do you think that's going to change at some point? Or are you going to just say, hey, my 99 are going to be people with 5,000 or more per deal or 10,000 or more a deal? Because you have a minimum commitment of what,
$1,000.
Me too. I just raised mine to 2,500. But so talk about the minimum and the impact that takes on your, times 100 for each syndicate.
I mean, I don't think in the short term it matters. I think in the long term, I've been talking with the AngelList team about a variety of ways you can fix that. One is to have a fund so that those $1,000 people can invest in a fund that then invests in these syndicates. Another one, what I'm doing right now is I say, okay, I've got a $200,000 deal I'm doing right now. I'm going to set aside $25K of it for the $1,000 guys because I don't need. It's not that hard to get $200,000 from 10 people or 20 people.
Right.
But I want the little checks because I want to, part of the promise of AngelList to me is the opportunity for the democratization of this sort of investing. And you can't democratize it if you only let in the guys with $10,000 checks.
Yeah.
So it's important to me sort of psychologically or spiritually to always try to make room for some of the $1,000 guys. And I've been looking, I was yelling at them, not yelling, but, poking them at AngelList on, hey, could you come up with a way for me to just rotate the $1,000 guys? Because it's hard for me to keep track of who got one and who didn't.
Yes. Because this is I mean, we're in a tragedy of just
Too much data.
too much data now, because I'm having the same experience now, which is I have a smaller number of people. I think I have 250 or something, maybe or so people, and it's $1 million. But I have a similar effect that is happening, which is people don't get in, or who didn't get in, and then people are emailing me the day after, and I'm sorry, but now I can't get people. So now I'm kind of taking the approach, which I think you enlightened me to, which is, hey, just expect you're going to do one of two or one of three, and just it's first come first serve, and speed
matters.
Speed will matter in this case. What are founders? How is it changing how they look at you now? I mean, have the founders become aware of the magnitude of the check you can write, and then how do they look at you? Are they asking you to join the board now? Are they looking at you like a VC? Because you are kind of doing the A rounds, and you're kind of writing a check that's similar to the whatever, Charles Rivers or whoever might dip down to this level and write a $500K check or whatever. So how do the founders look at you now? The word is out?
It seems to be. I mean, certainly through the syndicate page on AngelList, we're all getting a ton of inbound email now from people. So they seem to realize there's a lot of money as entrepreneurs. Board seats are, like everything else, negotiable. Mm-hmm. So I have taken one out of the three I did and not taken on the other two. On my first A round, part of the negotiation was he really didn't want a board member.
Huh.
It made him nervous to let someone have any power.
Okay.
And I said, okay, like with anything else, you can set whatever terms you want, and I will adjust my price given the terms you're giving me. So I said, I'll do it. I just, I want a little bit of a cheaper price if that's what you want. He goes, great.
Okay.
And we're done.
All right, and we're done. It's a negotiation. There you go. What was the one you took the board seat on? I'm curious.
UXPin.
I love UXPin.
Yeah, it's a Polish company. We moved them over here as part of the investment. So it's now a U.S. company with a huge team in Poland. It's growing really nicely. And with any luck, maybe I can turn around and lead an A round in them, late this year or early next year.
I have to say, I'm fascinated by this now with UXPin. You brought a company from Poland. How did you source this company? Was somebody using the product, or they pinged you out of the blue? How did you find a company in Poland doing essentially just the best wireframing software out there that I've seen in a while?
Well done.
It's really beautiful.
It is nice.
I've used it. I literally personally have made Inside.com
You've used
mock-ups
UXPin.
in UXPin.
Nice.
I built it, and then
All
my
right.
30-day trial went up, and I was like, oh my God, I got to renew. Haven't had a chance
You
yet.
were too cheap to pay it for it.
No, I'm going to pay for it, actually. I was just effing with it. I just wanted to play with it. I use balsamic. I use this. I try different things, and I have a designer.
We'll have to get you a free membership for a few more
I'll pay
months.
for it. It's like $5. Anyway,
So
how did you find that? I source a company in Poland.
I've been doing this a long time. I have friends all over the world. I get inbound from Prague and Warsaw and Hong Kong and all kinds of places. And I'm one of the few angels I know who have made non-U.S. investments, not that many. And so, once you do a few, everyone calls you.
So now you've proven quantity. But you did move them here.
Yeah.
So explain why you did that, and was that a requirement for you to do the big syndicate round?
Yeah. So as of today, it was in order to do a syndicate round because AngelList syndicates only can invest in U.S. companies.
Got it.
And frankly, Freestyle, who co-invested with us in that one, also really wanted a U.S. company for the normal VC silliness reasons.
Right. And this company out of Poland that a person in your network sends to you, when they find out they have a chance to get Gil as an investor in the syndicate and Freestyle and move to the Valley, what is that like for a couple of executives or startup founders in Poland?
They jump on a plane with really big smiles. And, frankly, Marcin, the founder, has been smiling ever since I met him. So it's really
incredible.
Great to
It's
see.
like a life-changing thing because in the past, if you wrote a $25K check or a $10K check or a $50K check, they're not moving.
Yep.
So the whole thing is UXPin is just a non-starter.
This ended up instead being over $1 million. I think it was close to $1.25 million as a seed round. And frankly, Freestyle heard about it on AngelList.
Wow. So,
right?
I guess they're a mid-tier VC or a small VC, right?
They're a
50
seed,
million.
seed fund, like
fund.
many others.
Yeah, 50 million or something, yeah.
And so that's how they got interested. And it's just been really wonderful to watch, right? I mean, they're doing great. It's growing like crazy, and all the usual sort of issues that come with that sort of growth, but champagne issues.
Yeah. So 6 or 7 out of 10 of the investments you've made have failed, I'm taking it? And by fail, I mean no return?
Oh, at least. I used to joke that in most cases I could have taken the 25 grand in cash, put it in the bathtub, lit it on fire,
And got a better return.
and got a better return because the heat of the fire would have blown $1 out.
It's an incredible analogy. Yeah, one of
Something
the bells,
would
the
have
heat
flown
would have
out,
just, I
right?
might have grabbed a $5
Right?
on the way out.
Like, Jesus.
Ooh,
nothing.
20. Woo! I got a Benjamin out of that.
Yeah, exactly.
So we're going to fail as syndicates, and you got all these folks getting involved at the 1 to 10, 20, 30K level.
100K in some cases.
Yeah, you get some big fish in there, huh? So what happens then? I mean, what do you think is going to happen when we start seeing the natural, death rate of startups, which most people would put at 6 or 7 out of 10? When that starts happening, what do you think? And this is going to take 4 or 5 years. But 3, 4, 5 years from now, when you see that, is that going to be unexpected by these syndicate members, or are they going to get it by then? Or do you think they get it now?
I don't really know.
Yeah.
I do worry that my friend who wanted to put 25K in each startup really didn't understand what he was doing. But, I can't talk to all 390 and sit them down on the couch and sort of do my therapy that I did with my friend.
Yeah.
So I do worry about that, and AngelList worries about that, and that's why they do have the rules they do about letting people in, and the notion of accredited investors is basically you either have enough income or enough assets that the U.S. government has determined you to be not stupid.
Right. And who better than the U.S. government to determine people's intelligence?
And, to be fair, maybe not stupid is the right word, because there are plenty of stupid people with money.
Qualified to make financial decisions.
Capable of losing $5,000 and not having it ruin your life. Let's call it that.
Yeah. So if you make $30,000 a year, making a $5,000 investment is not necessarily where you should be at. But making a $500 one might be perfectly fine.
Right.
And that's what people are going to need to learn. But I think there's so many protections inside of AngelList for this now that I'd be very surprised if anybody does it. But when you fill out that form, I am putting in all the risk factors. And I am telling people like, hey, my syndicate is the trench run syndicate. And that basically means, like Luke Skywalker going to kill the Death Star, like we're going to shoot that thermal exhaust, which is the size of a womp rat, with Darth Vader on our tail. This is a trench run. There's no effing way that it's going to work, but in my heart, one of them is going to work, right? So everyone that goes down, like those TIE fighters are going to start picking us up, but one's going to make it. I believe in my heart one will make it because I've seen one of mine make it before.
I hope you don't mind, but I'm going to go copy and paste some of that into mine.
Go ahead. I'm just trying to give them
great.
the disclaimers. And then I have one guy. Have you had this experience with the syndicates now? One person who has like 1,000 follow-up questions to everything, and you're like, I think that if you're putting $1,000 in and you've got 1,000 questions, this is not the deal for you. Have you had that? Like the chatty Cathy?
I had
Chatty
a
Cathy?
German PhD.
Oh, boy. You lost me on German
very smart
PhD.
guy.
Woo!
Clearly. And he sends me a note, and he goes, "This is very interesting." I'm trying to do my bad German accent.
Yeah, it's good.
It's good.
That's good.
It's very interesting. I would like to see 1-year financials, business plan, and spend an hour on the phone with the CEO.
Right.
To understand the opportunity. And I wrote him back, and I said, those are all very reasonable requests from a professional investor. No, no, and no.
Well, I mean, you're putting $1,000 in.
No.
Yeah.
Right?
Like, it's a little bit.
Like, if that's what you need, don't do this. This is a bad thing for you.
This is like, hey, by the way, when you go public,
Yeah.
you can actually get all that stuff. And Ernst & Young and PricewaterhouseCoopers will have certified those financials.
Now, I had the opposite, which was a guy who wanted to invest in something I had thought about starting a while back. And I looked at his AngelList profile, and I sent him a very nice note saying, look, you seem really nice, and I really am very flattered, but I don't think this is an appropriate investment for you, and I don't know you, and so I'm not going to take money from you.
Oh, boy.
And he wrote me back this very short email. He said, what is your mailing address?
Ah.
And my first thought is letter bomb.
Flaming pile of poop.
My second thought is
Doorstep.
poop.
Yeah, it's definitely like a flaming feces kind of
Right.
situation. Like
And
on
so,
Halloween.
I was like, thought about it for a minute and wrote him back and I said, why? And he says, I have a check for $50,000 sitting on my desk and I need to know where to mail it. At which point I really don't want to take money from this guy.
Okay, this is
because he's a little crazy.
Disturbed person, yeah.
Well, I mean, no, he's too emotional. He may be very smart. He may be very capable. He's I joke about the dentist, right? I have a dentist in my syndicate.
Oh, you literally, because in the industry we joke like dentist money is
his
but you have a
AngelList
literal
profile
dentist.
is his name, DDS.
Oh boy.
Like he's actually a dentist.
And dentists are known for funding small businesses
well,
all over their community because they have extra cash flow.
They do have a lot of money. Yeah. They're generally very successful people in their communities, like doctors as well. So I'm sure he has some amount of, quote unquote fun money to invest in something a little speculative.
Right, that he could be spending on poker.
Yeah, I mean, he's going to spend it, exactly. He's going to go to Vegas if he doesn't do this. And this is more socially beneficial. So I'm not opposed to it, but like, you shouldn't write a check for $50,000 to someone you don't know without doing some due diligence, I would think.
Yeah. So when we look at this, in terms of the accredited investors, if they were to allow because it's supposed to be coming, the unaccredited investors, the folks who are, don't have the big net worth, like if they start coming in for $50 or $100 a deal, are you going to embrace that as well if that was available? Okay.
I mean, Lending Club already has. People are writing, $25 checks to someone they've never met as part of a loan. Kiva does it. There's a bunch of people who do it. I don't know why $1,000. Well, the reason I think $1,000 is the limit on AngelList is because the angel investment is limited to this 100-person thing.
Yeah.
So it's really hard to raise a lot of money from people writing $25 checks today. Accredited should really be percentage of your net worth, right? If you want to invest 0.1% of your net worth,
0.1%.
God love you, right? Like the worst thing that happens is not too bad.
Rounding error.
If you want to invest 20% of your net worth, that's a really poor decision.
I tell everybody this should be angel investing should be a low single-digit asset
Yep.
class.
1%, 2%.
2%, 3%. So if your net worth was $500,000, yeah, by all means, $25K upper limit. But probably more like 10 to 15.
Yeah,
10
no,
to 25.
mine got close to 10%.
Yeah.
But I was doing it like a lot.
Yeah. There's a lot more companies today.
Yeah.
And people talk about the bubble, not a bubble. And we've seen a bubble in this industry that was quite spectacular. How is this moment in time different than that moment in time? Is this a bubble now? Do you feel it's bubbly or not? Because you have like a very interesting insight into the earliest stage companies, and you're seeing your other companies mature and have, let's just face it, like good valuations, not rich valuations, great exits.
Yep.
Is this a bubble or is this just, a hot market?
If I knew, I'd be on Wall Street. What I will say is in 99, the definition of the bubble was when Benchmark funded Respond.com and they had Cirque du Soleil perform at their launch party.
Okay.
That was pretty cool, but not the best use of funds.
So when people are doing silly things with money, that's a pretty good indicator, bubble.
It's one of them.
We don't actually see that now.
No.
I mean, I haven't
really
seen
don't.
any conspicuous, insane consumption. Once in a while, you see a nice lobby of a company that's raised like a whatever IPO round, but a nice office does not indicate like
totally
any kind of like extravagance. It indicates you care about having great employees.
So let me answer it more tactically. I think the prices paid pre-product by angels are too high.
Okay.
I think the bridge rounds to get to an A are generally pretty rough on the entrepreneurs and good for investors. So I do a lot of bridge investing now.
So let's explain what a bridge is to people who don't know, because this is a very interesting.
Bridge is you're a SaaS company doing $20K a month.
Okay.
No one's going to give you an A.
You got the
You're
pulse.
growing.
You got a pulse.
You got
something here.
And it's got potential, but it's pretty early.
You got that 20K, but a VC is going to want to see that 80K. And you got to figure out how to get from 20 to 80.
Right. So the bridge is bridging you from 20K to 80K.
And at that point in time, they may have raised pre-launch at a $4 million valuation, $5 million.
Yep.
And now
You might still get 5 a
It's gonna
year and
be
a half
flat.
later.
flat. And what is an entrepreneur? How do they deal with that emotionally? How do you sort of bridge that in the bridge round with the founder? I mean, because obviously they hear all these crazy valuations happen, and they got delusions of grandeur in some cases. They got, peer envy. How do you bridge that with them?
Well, I tell them, don't shoot the messenger. I'm representing 390 people, and I went back and talked to them.
Yeah.
And, no one ever put a gun to your head and said, take Gil's money,
Right.
right? Ultimately, all I can do is make you an offer, and
You take it or not.
you can take it or not.
Shop
I'm not gonna, lock you in a closet until you take it, and I'm not gonna lie to you like your friend, the VC did.
Oh,
Not friend.
yeah. Past friend.
right.
By the way, I just want to let people know, you can't be friends with somebody and screw them. I'm from Brooklyn. It doesn't work that way. So I know, because I did this delusional thing in Silicon Valley where I was like, I know I screwed you. I'll make it up to you. For me, that doesn't fly. Does that fly with you?
It happens in the Valley all the time.
What is it about the
It's
Valley where
also
people
like I
will
lied
not?
on my resume, and that's okay too, right? I mean, you see
It's
it all the time.
bizarre. Why do people in this town think that they can, elbow somebody in the nose and then I'm just going to keep quiet about it?
It works for Hollywood celebrities too. If you're hot, you're hot. What are you going to do? I don't know why, but it is the phenomenon.
It's bizarre behavior to me.
I mean, I don't like it, but it is. I do observe it. So bridges are interesting. I would argue A rounds are generally pretty fairly priced. I haven't seen frothy A's.
Usually the A's are 8 to 15.
Yeah, something in that range.
But the pre-launch is where it does get a little delusional.
Yeah.
So what should a pre-launch company be? And will you invest in a pre-launch company, or you need to see the
Not
product?
unless it's Michael Jordan starting it.
I have the same philosophy.
Yep.
It's like unless you're like Josh Williams coming off Gowalla, which I was an investor in, which I thought was a fine product, didn't work out, fine.
Yep.
I told him I want to be the first check in the next thing, fine.
Yep.
And I don't need to see what he's doing. But what should, if you have like a prototype that seems like it's fairly well crafted, and maybe there's 100 people or 1,000 people using it in the beta and they like it, what would you price something like that at? A consumer product or a SaaS product? What should it be at?
I won't price it, but I've seen those rounds get priced at 2 pre, and I've seen them get done at 12 pre. I mean, it's just all over the place.
Wow. So 12 pre.
Actually, that's not fair. I invested in a company that didn't have a product live at a 20 pre. It's worse than that.
And did you get clobbered?
The A round was 80, so no.
Okay, so it worked out in that case.
Right.
And you think it's going to work out long term or no? Without saying the name of the company.
Fingers crossed, yes.
Okay.
And that same month that I did 20 pre for a pre-product company, I did $1.5 million pre for a SaaS business with revenue that was growing 10% a month. And people look at that and they go,
how'd you get that deal?
huh.
Yeah.
And again, it's just, a lot of this is cooking, not math. Mm-hmm. Right?
Yeah,
How do you make a good
bit of
souffle?
this,
It's a little bit of,
a little alchemy, yeah.
A little magic, a little emotion. It's you can't quantify it the way you would like. But so to me, it's not a bubble. It's excess enthusiasm in the very early days when there's a lot of passion.
Right.
Rational behavior in bridges and A's. A lot of competition in the B, which is driving prices up. And then some incredible competition in the late stage, right? Everyone's piling into late stage, which again is the sign of the bubble is Fidelity did my late stage round, Vanguard did my late stage round,
The people
Tiger
who normally
did
are
my late
taking these
stage
probably.
round.
And in those cases, they're putting 100 million or 200 million into something because they're going to double their money.
I've talked to 2 VC firms that have now raised sidecar funds because they're limited to 100 or 200 million in their main fund. And they want to be able to write $500 million checks, which it's a little crazy.
Yeah, but when you get an Airbnb or a Dropbox, you put
Why
that
not?
500 in, and it goes public, and you double your money. It's
Could be
only
worse.
double your money, but it's double your money on a big number.
Yeah, I'll take $500 million in profit. That seems okay.
Yeah, I think it's interesting. So the best way for somebody to get a meeting or to get on your radar, what are the best ways for people to do that now? Because you're getting popular.
So I get a lot of inbound, and most of it goes to my team. I now have 2 associates and an intern working on my syndicate.
Oh, wow.
And then on the SaaS syndicate, which we just launched, Nathan is a part-time associate on that one. So a lot of it goes to my team. The ones I pay more attention to are the ones that come in through Jason or Reed or someone I know. And
Trusted source.
well, trusted source is great. Friend is okay too. And one of my jokes is, boy, you sent me an email out, like you somehow found my email address and you sent me an email. I don't know who you are. The odds are that going in my spam filter to begin with, thanks to Google, are pretty high.
Yeah.
But really, like, I have 3,000 friends on LinkedIn.
You couldn't find one.
Couldn't find some way to get to me that would give you a little more
edge
and maybe some
warmth.
insight into how I think and warmth.
Yeah.
Okay, so I know exactly how much time you've put into approaching me. None.
None. Yeah. So if you have a real good strategy of how I'm going to get to this angel, that's a wise thing to do.
I mean,
I agree.
I worked in sales, and in sales, you never do a cold call.
Right. You want to.
You always find a way to get an introduction, to get a referral. Yeah. It's just.
You know what the thing I love? I'm a sucker for. I love getting a URL.
Oh, with a 2-minute video, that one.
Yeah, just like a URL, 2-minute video, a chart, like such a small amount of text, but like we're doing something that is similar to these 3 investments that you've done.
Yeah.
And we're growing at this rate. We've been public for 6 weeks.
Perfect.
Here's a link.
Perfect.
And I click the link and I look at the product. I'm like, this. You know what? I have a meeting. I have a meeting next week with a company that was just a link.
Yep.
And I don't think I'm going to invest in it because I'm like, I like the product.
That was a good one. The other one that I took, although it didn't work out so well, was a very large package showed up.
Hey-o.
I opened it up.
Not poop.
No, not poop.
Good.
It's a 7 or 8 foot long rowing oar from like Crew, right?
Okay.
Which I wasn't in. Not that I'm not that good at sports.
With the domain name on it.
Nothing on it, except a little note saying, "Do I have your attention now?"
Okay.
I was like, "Yes, you do."
Okay, and I think that was the first scene in the movie 7 as well. I'm not sure. I think it ended with somebody's head in a box. I don't want to be a spoiler.
Yeah, it wasn't the horse's head, but
I mean, this is.
I was like,
okay,
like,
we've
that
got
was
an
pretty
oar,
weird. I got to be.
And we're gonna go on a boat, and there's the fishes, and I mean, this has got a little.
We're all busy. You got to get someone's attention somehow. That
attention
was
is the
effective.
finite quality.
It wasn't.
Attention is the finite quality.
Yeah.
It's
Exactly.
genius. All right, listen, Gil, this has been great. I mean, an hour goes by in 10 minutes with you. Gil Penchina, obviously, just fabulous angel investor, and you're one of the co-founders of Fastly.com.
Yep.
Which is doing fantastic as well. I hear great things about that company, formerly of eBay, et cetera, et cetera. Thanks again to all of our partners who, keep the lights on here. Producer Gina, boy, am I going to miss you, but stay in touch. And Jacob doing a great job, and everybody on the team. Demont. And everybody, just Brandon, everybody doing a great job here at Launch and This Week in Startups. Follow Gil Penchina on Twitter, and I'm Jason. And if you want to be on the secret back channel, and you made it to this 104 minutes into the program, TWiST.co. You probably need to be there. All right, we'll see you all next time on This Week in Startups. Bye-bye.
Jason, thanks so much.
It's a pleasure.